Welcome back to Alpha Recap, your post-market debrief from stockalpha.ai. Hope here. The market closed for the day, and we've got a lot to unpack. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots of moving pieces today. Deals, AI headlines, and a surprisingly broad rally under the surface.
Let's start with the scoreboard. The S&P 500 closed up about 0.75%. The Nasdaq-100 jumped just over 1%, and the Russell 2000 rose about 1% as well.
That was the clearest signal. Tech, led by AI-related names, was the engine, but small caps and cyclicals were right there with it. Healthy breath. Right.
Okay, Josh, tell our listeners what actually lit the fuse today.
So what really stands out here is a two-pronged story. First, headlines tied to AI infrastructure. Think in AMD and Meta linkage and photonics developments. Pushed investors toward chip makers and networking suppliers on the idea of multi-year data center spending. Second, communications and media had a run of deal and earnings news that gave the tape extra momentum at the open.
So deals plus AI. Simple as that?
Pretty much. But, the nuance matters. It wasn't just one blockbuster announcement. It was a cluster. Product-level news about higher capacity AI deployments, commentary about photonics helping big cloud players reach gigawatt scale, and chatter that those moves will require years of CapEx. Traders priced that forward.
And that's why large cap tech led the day?
Exactly. The Nasdaq-100 outperformed because those large AI and cloud-exposed names got bid. Alphabet finished the day higher after coverage highlighted resilience in advertising and cloud. That helped anchor the big cap group.
Yeah, that tracks.
But the interesting bit was that the Russell 2000 didn't get left behind. When small caps climbed in near parity with the broad market, it told us this wasn't a narrow tech-only spike.
Which sectors surprised you on the upside?
Materials and mining had a good day. Commodity-linked cyclicals rallied on demand outlooks tied to industrial activity and renewables projects. Energy also moved higher, helped by oil strength and some renewables project headlines. Even utilities saw unusual upside because of big CapEx and storage record news that framed parts of the sector as infrastructure plays rather than pure yield names.
Interesting. Utilities as infrastructure. I like that reframing.
Yeah, it's a neat shift when investors start treating long-lived projects like growth drivers, not just income.
Quick reactions. Tesla lagged, Home Depot announced a dividend bump, and a bunch of filings got attention. Can you unpack those?
Sure. Tesla wrestled with Europe-specific headwinds, which weighed on the stock and related suppliers. That was a drag in the auto space. Home Depot announced about a 1.3% dividend increase, which the market read as confidence in cash flow. And then you had a few 8K filings from companies like Elanco and Westlake that traders parsed for operational signals. Smaller moves, but they mattered in sector roundups. Right.
Let's pause on the AI angle. You mentioned photonics and a potential AMD and Meta linkage. For listeners who aren't deep in hardware, explain why that's important in plain terms.
Absolutely. Think of photonics like a much faster highway for data inside and between data centers. If you can move more data, faster, and with lower energy costs, big AI systems can scale up without the same bottlenecks. If AMD and Meta are coordinating on larger builds, that signals multi-year purchasing for chips and networking gear. So suppliers that make the parts for those highways can expect steadier, higher demand. That's the CapEx story traders bought into today.
So essentially, better plumbing for AI means more orders for the companies that make the plumbing.
Exactly. Big picture. Hardware and networking are the backbone to scale software gains, and investors often front-run that buying.
We're hearing a lot about the Fed and data. Where did policy chatter fit into today's move?
Clears throat. Investors are operating with a data-dependent view of the Fed. Recent softer inflation signals, but a still resilient jobs market, have left the Fed's path ambiguous. Today's risk-on tone suggested the market had priced in a lower tempo of tightening risk, meaning traders felt comfortable front-running CapEx and earnings upside while waiting for the next inflation prints or Fed minutes.
So the rally had an optimistic streak, but not blind faith.
Exactly that. Efficient risk-taking. Buyers were selective, and you saw pockets of profit-taking in names that had already run, which is healthy.
A lot to watch going into the next session. What are the key things traders should have on their radar?
Quick list. 1. Any fresh Fed speak or inflation and jobs data. Even small surprises can shift sentiment. 2. Follow through on the AMD and Meta linkage in any CapEx details. Confirmation would be bullish for semiconductors, photonics, and networking suppliers. 3. Corporate headlines and earnings in communications, materials, and industrials. Those will test whether the rotation is sustainable. 4. Tesla developments in Europe. Further trouble could pressure autos and suppliers. And 5. Small cap breadth. If the Russell 2000 keeps participating, that points to a broader rally.
Got it. Keep an eye on the data calendar and on CapEx confirmations. Short reactions. Big list.
Definitely.
Let's talk positioning. For traders or active investors listening, what practical steps would you suggest?
Positioning advice in one sentence. Trim overstretched winners, stay exposed to AI-related semiconductors and networking for asymmetric upside, but size positions with defined risk and watch small cap breadth as a leading indicator.
Short and practical. Anything else on risk management?
Yeah, be ready for headline-driven volatility. This market remains sensitive to policy language and inflation prints, so use stops or hedges if you're holding concentrated bets in rate-sensitive areas. Right.
Before we wrap, any underrated corners of the market that caught your eye today?
Utilities surprised me on the upside because they were repositioned as infrastructure plays. And some of the nearshoring or outsourcing software names that got press around operational redefinition had interesting moves. Not headline grabbing, but meaningful for those sectors. Yeah, honestly, I was a bit surprised by how supportive materials were. That's what helped link growth and cyclicals on the same up day.
Final takeaways for listeners?
Bottom line, it was a constructive risk-on session. The Nasdaq-100 outperformed, the S&P 500 closed up about 0.75%, and the Russell 2000 rose about 1%. So both growth and small caps participated. AI and deal flow powered tech, while materials, energy, and even utilities helped cyclicals keep pace. The market is front-running CapEx hopes, but remains sensitive to Fed signals and inflation data.
Perfect summary. Okay, quick wrap. Trim overstretched winners. Keep selective exposure to AI hardware and networking, and watch small cap breadth for the next clue on sustainability.
And keep your ears open for follow-through on the AMD and Meta story. That's the one that could extend this move.
Thanks, Josh. That was great context.
My pleasure.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly, and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. See you after the next close.